shift focus and talk fundamentals of the market. Gautam Trivedi, Managing Partner, Nepean Capital, is now joining us for more. Gautam, morning. Thanks for your time. It just occurred to me before you came, Aisha and I were just talking about how an airport company, one of the brokerages was showcasing this stock to clients in New York, and they must have passed through JFK. Well, you had an ordeal this time in JFK in your US trip themselves. Are you wanting to add airport names in your portfolio after coming back? What amazing airports we have, at least capture them in the portfolios.
Well, that's a good question, and I don't know if the answer to my ordeal and JFK means immediately come and buy Indian airport companies. I haven't studied, frankly, the fundamentals, so it's a little early for me to. But thanks for leading me on to that. So I will, my team and I will do some work on it today.
Well, talk to us about what the FI or your friendly investor community had to say about India this time, because it was also coinciding with the biggest spectator events of the 5 years. Which way does the political kind of situation shapes up? So what were the queries like?
Yeah, I think the central question was with respect to will Prime Minister Modi secure a third term? So I think that was one big concern, that if he did not, what could a non-NDA government look like? I think that thankfully those fears have been put to rest. But the other question, of course, was with respect to valuation. And I think one of the pushbacks that I gave them was the fact that over the past 3 years, India has been historically expensive, more so over the past 3 years versus China. China currently is still at about 9 to 9.5 times calendar 25 PE. We're at 21.5 times. So still a huge premium to China. So I said, over the past 3 years, India's been expensive post-COVID. You've still put money. In fact, last year they put accumulated $21 billion of net FPI flows into India. So why is year to date, why are you selling? And they said, finally, we do have an alternative. So if you look at the pecking order this year of flows into Asian markets, we are at the bottom. So we've gone from being on the top, I'm talking of Asia ex-Japan. Now, if I include Japan, if you look at the absolute sheer numbers, so we've seen about $33 billion year to date of net flows into Japan. Korea is now about 16 billion. China's 12. Taiwan's about 6.5 or so. And we're a negative 3.3. So I think the fact that the Chinese government announced a whole bunch of measures to stimulate the economy has been taken very well and positively by foreign portfolio investors who were looking for an alpha, potentially an alpha generating market. So I think that's the reason you've seen so much money go into China. I'm not saying it's at the expense of India, but there are other options within Asia this year versus last year.
Right. Gautam, hi, morning. But, just going by the construct right now in India, I don't know what could cause correction, right? And a meaningful one for the FIs to come back to India in a meaningful way. Because, yes, the exit polls got it wrong, but there's government continuity. The big four portfolios are all with the same folks. So, and more importantly, look at the gush of SIP flows that we are seeing into the markets. Every month, that's only showcasing an uptick. So, I can't really pinpoint what would cause the markets to cool off from here.
I think it's $1 billion question. I don't think anybody has the answer to that, because if foreign portfolio investors are not investing, and if you look at the numbers year to date, as I said, FPIs are a negative 3.3, DIIs, domestic institutional investors, are 28 billion and counting. So that avalanche of money that's coming in from domestic pools of capital, whether it's family offices, retail, and of course, retail coming in either direct or through mutual funds, that isn't stopping. And I don't see that necessarily having any major correction. The market, I think, had fears last week about the formation of the government, who would get what portfolio. But I think for the most part, it's status quo. And as a result, I think the mindset internally within investors in India is that policy continuity, political continuity, economic continuity will be there. And as a result, why should they deviate? They don't seem to be disturbed by the fact that we are the most expensive large market in the world. And let's be honest, even if they wanted to invest overseas, it's not easy to invest overseas. One is lack of understanding. Second is even if you do use your LRS money to invest overseas, there's a 20% tax collected at source. So I think they much rather use that for their children's education or foreign travel or other expenses versus investing in overseas markets where they have limited knowledge.
Right, and Gautam, morning, as you know, you have the new ministers who have been taking oath for the cabinet. For instance, the IT minister was talking about strong technology foundation that will be laid. I just want to understand, is this a theme as a mega trend that you would look at, digitization, AI, etc.?
I think so. The question I was asked recently, as including the investors that I met in the US, what are the big themes here? And I think AI/data centers, and they're all obviously linked together, is going to be a massive theme in this country. So the fact that the government has mandated all of the global social media companies to have the data stored in India, not offshore, has led to an explosive growth in the data center business. And as a result, we've been tracking that sector. There are not too many ways, unfortunately, to play them in a pure play. So I think the other way to look at it is to maybe play them via power companies, because the reality is that if I look at a recent report by a bulge bracket firm with respect to the power consumption that's increasing because of data center penetration, the absolute amount of power that data centers today consume in the United States, and I'm using that as an example to extrapolate what will likely happen in India, it's currently only 3%. By 2030, that number is expected to go to 8%. So data centers will consume from 3% to 8% of the total power generated in the United States. And I think you'll see similar numbers in terms of growth in the power sector here as a result of that. So while there are no direct listed plays today within the data center business, maybe the power companies could be one way to play them.
Right. Gautam, what are your thoughts on the way US, the ecosystem is actually looking towards protectionism? Because there is talk that the big move in pharma stocks could actually halt as we go into US elections, and noises on protection of the gain currency. But at the same time, the dependence US system has on Indian imports and pharma imports cannot be replaced in a hurry. What are your thoughts on the pharma space in that light?
So this is a rhetoric that we hear before every US presidential election. So I don't think it was there at the time of the Obama, both the terms, and I've heard this multiple times in my lifetime. So that's not a real surprise. Can Indian companies further reduce prices and make medicines more affordable for US consumers? Obviously, they can. The good news is that China, which also is a very big player in the pharma market, let's not forget them, their relationships with the US, obviously, we know how that's going. So as a result, is this a potential window of opportunity for Indian companies to gain more market share in the States? The answer is yes. But I think you'll have to wait till the elections get over.
Right. What are your thoughts on some of the deep cyclicals here in India? But they've been doing very well, and now the valuation argument is coming under questions. Stocks like the entire top bracket, top half a dozen companies in the industrial side, but then again alternatives, because they feed into such amazing plays. They feed into railways, energy transition. There are no other companies available to play, and probably valuations getting stretched. How do you negotiate between the two?
Well, I think we don't look at cyclicals basically because we are a very strictly long-only fund, which is special sits. So our focus primarily has been to find stocks where we see an incremental catalyst or a trigger, like a change in CEO, change in ownership, generational change at the company level, i.e. deleveraging, sale of an asset, etc. So we, from our standpoint, we're not the best in terms of answering a question on cyclicals, but my view is that it's a global product, and while we've seen consumption both for defense and railways and infrastructure, explode in this country thanks to the Modi government, I still think that the overall pricing is determined by global factors. So it's if prices for steel, for example, were to fall in Shanghai, that impact does come through in our markets as well.
So what exactly how are you scanning the system right now? Or any special situations, or the low-hanging fruit is gone? Are there some available?
Well, the special sits, can happen tomorrow morning or this afternoon or 6 months later, right? If a company promoter, for example, is looking at selling his or her business, the one trend that I've noticed, and I may have said this in the past, is that increasingly children or the next generation who've studied overseas and or worked overseas are coming back and telling their parents that they have no interest in running a factory that employs 2,000 people sitting in Faridabad. I'm just citing an example. So I think increasingly you're seeing M&A opportunities. Global private equity funds have been very active in India, buying out promoter stakes in listed mid and even slightly bigger than mid-cap companies, but keeping the companies listed. So that becomes a very big trigger for funds like us to ride on that investment that a global private equity fund will take. So we look for those sort of opportunities. And, we have in our portfolio, full disclosure, we have a company called Eureka Forbes, India's largest water purifying brand called AquaGuard. Company's doing extremely well now that they've brought in Pratik Pota from Domino's to be the CEO of the company. And margins have doubled over the past 12 months. So we look for these sort of opportunities where I think there's an incremental catalyst or a change coming.
That's quite interesting. But Gautam, the problem with MNCs has always been about the valuations that some of them have quoted. I mean, I don't know what's your thought here.
Yeah, I think if you look at a Nestle or a Unilever or a Procter & Gamble, they're trading at 2 to 3x the multiples of their parent companies back in the Western, wherever they're listed. So that's historically been the case. But, I think it brings me to my earlier point about private equity funds coming and buying out the promoter stakes in listed mid-cap companies. What that does do from a market perspective, and I'm not judging anybody, but the fact is the market does give a valuation uptick or a premium to such companies where they change hands or an MNC comes in and buys out the company. So the faith in MNC companies is, for historical reasons, has been a lot stronger. And as a result, you'll still see a Unilever or a Nestle, trading at 50 plus times, valuation versus their domestic peers. So that's not going to change, I think.
Great talking with you. Thanks very much, Gautam, for running us through some of those promising themes as well as what the overall FII community seems to be headed towards. So that's the take coming in, that as of now, it's an expensive market, India versus China, but we are seeing power, data center penetration. Those are interesting emerging themes.
If you like this video, then like, share and subscribe to ET Now.